Hi, I'm Jeff.Blum, a wealth management specialist at Raymond James. I work with my clients on preparing for the years ahead full of unknowns. One of the hardest questions to answer in life is, how long are we going to live? Followed by, will I have enough money? Well, unfortunately, in most cases, the question about how long I'm going to live cannot be answered. I find that in our heads, many times we plan for an early demise. I had a client call me a few years back, and he was extremely frustrated. He proceeded to tell me that he never thought he would live this long. He was concerned because he had spent a bit of money over the last few years, expecting to check out early, but life had different plans. This would not be an issue if you'd planned for all the possibilities that could hit us. Life is about choices, like golf or skydiving. Golf, you may say, is a safe sport, although I've heard that there are many cases of people being killed by stray golf balls. Skydiving, well, you're living more on the edge. I've stayed away from skydiving because I know with my luck, the chute wouldn't open. What are the possibilities we should plan for then? Getting old, changes in our health, and something like even predators. The first, getting old. Does anyone know how long the oldest person living was? Well, the oldest verified person was Jean Clement from France, born February 21st, 1875. 1875, and lived until August 4th of 1997. 122 years. The oldest current living person is Nabi Tajimi of Japan, currently 118 years old. Did they plan to live this long? I find one of the biggest fears as we grow older is outliving our means. Longevity is about getting longer and longer. Today, Social Security estimates that a man living age 65 can live to 86 years old, and a woman of age 65 can live to 88. The next big elephant in the room is healthcare. To start off, once you turn 65, there's Medicare, which has all its parts. Part A, which covers your hospitalization, which you have to sign up for or face penalties. Then Part B, which covers doctors or not. Part C, which is a supplement, help with Part A and Part B. And last, there's Part D for prescriptions, which gave us the term donut hole. The current out-of-pocket cost for retirement for a couple age 65 is $240,000. In addition, if you have a condition requiring long-term care, in our area alone, the cost can range from $60,000 to $120,000 a year. And the last thing is there's predators out there who are looking to take your money, from internet scams to investment scams to telephone fraud to many forms of elder abuse. You constantly have to be aware. This event today wasn't designed to scare you, but to give you some practical help in ways to survive retirement and live a healthy, happy retirement. We talked about some things that can derail you into retirement, and now I want to show you a few things that can help you keep you on those rails for a successful retirement. A place to start is with a plan. I sit down with my clients, and there are the wants, the wishes, and the needs. My job as a financial advisor is to work to make sure you have the needs covered and work towards the wants and the wishes. The thing about planning is the earlier you plan, the better. I find most people do not even think of retiring until maybe a few years before they retire. If you start early, that's fantastic. If not, it's never too late, or should I say it's almost never too late. In retirement, we look at what we're spending today and tomorrow. Retirement from a financial standpoint is all about dollars in and dollars out. This includes pensions, Social Security, interest income, dividends, and other retirement income. The more pools, the better. How many of you own annuities? There have been many things said about annuities over the years, but the basic premise of an annuity is great for retirement. It's like having a pension. There are many ways to achieve a healthy retirement, but if an annuity is part of it, it is important to work with somebody to make sure you're getting into the right one that works best for you. An annuity is a contract between you and an insurance company where you invest your money and the insurance company pays you an income for the rest of your life. If you were Nabi Tajimi, you might not make the insurance company very happy because you'd still be getting a check. Insurance companies several years ago developed living benefits in their annuity contracts, which allow you to keep control of your money and receive income benefits for the rest of your life. What's nice about these kind of contracts is if you don't meet an early demise, you can pass the annuity or the remaining cash to your beneficiaries. The next thing that I see as a concern is if someone gets sick. Outside care and skilled nursing is not covered by your insurance or Social Security in most cases. The cost of dealing with long-term care illnesses falls on your shoulders or your family's shoulders. Costs can vary, I've seen in our area, like I said, between $60,000 and $120,000 a year. I had one client in a home out here paying $15,000 a month for care. They pay it out of pocket and they had the resources to do it. Many of us have put a solid financial plan together but never expected to deal with a long-term care expense. This insurance for long-term care is designed to provide the funds for long-term care. Your long-term care benefit is usually triggered when you're not able to perform 2 out of the 6 average daily living skills. These are feeding, toiletry, grooming, dressing, bathing, walking, or transferring, such as moving from your bed to your wheelchair. The cost of insurance is based on your health and your age. There are different kinds of policies out there, and you can insure for as many years as you think you'll need. Basic long-term care works like car insurance. You pay as you go. It's effective, but it's not a fixed payment. Premiums do increase as you age. There is also single premium policies where you pay a single premium based upon some criteria and provide long-term care and some other unique features, and you only pay one premium. One of these type of policies is called MoneyGuard, which provides long-term care, and if you don't use it, there's a life insurance benefit at your death. If you own life insurance policies, you can convert your cash value into policies that lets your death benefit become a long-term care benefit. If you own annuities and are not using them, there's ways to triple these kind of benefits for long-term care. As baby boomers age, I'm finding more and more options on dealing with long-term care. I'm insurance licensed, so if you have any questions on your policies, contact me and I can help you out. And last, there are predators out there lurking everywhere. There's so many scams out there trying to get your money. As we age, our minds don't work as well, and sometimes we get confused. I've heard of scams where someone will call and claim to be your grandson needing to bail them out of jail, but they don't want their parents to know. I talked to a woman who said it was garbled, but it sounded like him. Even if it means your grandson spends a night in jail, hang up the phone. The IRS will never call and demand money from you. Hang up the phone. And no, that isn't Ed McMahon knocking on your door. Unfortunately, their threats are not only from the outside. I read in the newspaper recently of a couple almost lost their home of 45 years. They put their grandson on the title for estate purposes, which he suggested, and he sold the house right out from under them. Fortunately, an alert neighbor noticed something unusual and alerted them just in time. Please, please have a lifeguard, a few lifeguards. A lifeguard is someone who can look after you and that you can bounce ideas off of. So if your grandson wants to be on your title, you can talk to somebody you trust to make sure that all makes sense. Your family can be your lifeguard, as you probably know them the best. But it's good to have someone outside of the family as well, as like a pastor, a CPA, an attorney, or a financial advisor who can be outside the emotions. I have several clients call me to ask about important financial decisions. One thing I've seen many times over is when people set up their trusts. They have their kids or a family member as successor trustee. This makes it easy, but sometimes it creates a lot of bad feelings between siblings. A simple way to deal with this is having a corporate trustee who can make sure your assets are distributed the way you want. Raymond James has Raymond James Trust, which can help you set up a corporate trustee. In conclusion, I want to get across how important it is to prepare a plan. This is the main thing I do for my clients. Every plan is different, as every person is different. We put a plan together, but review it on an annual basis. Things change, and a plan is a living, breathing thing, and will change as time goes on, and situations present themselves. But once you develop a plan and have a good idea where you are going, the rest is easy. If you have a plan and need to review it, or never had a plan and want to get started, contact me and we can make sure you are on the course to survive retirement. You can find my contact information below. And thank you for watching today.